Welcome to Weekly Profit Talk. As the name implies, we do this every single week. We do this at 8:30 a.m. Mountain Time. That is 7:30 if you're on the West Coast, 10:30 if you're on the East Coast. Good morning. Welcome on this Halloween week. We thought we'd have a little bit of fun and kind of put a fun and spooky spin on this week's um, topic, which is the scariest tax and cash flow monsters haunting private physicians. So it made you some special background points here. Let's go ahead and do this. So first scary monster, of course, is the phantom of estimated quarterly taxes. Um, Now, we have gone over this extensively over the last couple of months. We're in the season where it's extremely important to be making good estimated tax payments. If you're going to pay over $1,000 in tax in the course of a year, and as a private physician, you almost certainly are, you have to pay taxes 4 times a year. And you may be saying to yourself, well, if this is the first time you're watching and you haven't been following us, then you might be sitting there going, well, actually, who says? I was like, well, what the IRS will do is they are going to basically hit you with frightening and very scary underpayment penalties. That creaky door you hear is the sound of pure horror in the form of unwanted penalties. What this means is if you don't make estimated tax payments and you do pay over $1,000 in tax, it is most likely that you're going to pay hundreds, maybe even over $1,000 in underpayment penalties on top of all the tax that you owe, and you have to come up with it all at once. So they will charge you for underpayment for every single quarter. Also, when you're doing your tax return, basically the IRS wants to know how much you made an estimated tax payment for each of the 4 periods. Remember what those are? April 15th, June 15th, September 15th, which is just passed. And we have one final one, which you can actually do an excellent estimate for on January 15th of 2026. Reason I say that is you should already have your end of year financials and know exactly how much you made. So don't be left out in the cold without a way to defend yourself. Calculate your payment every quarter based on actual current performance. Okay, great. Zombie accounts receivable, also known as claims receivables. They just keep shuffling forward, never quite getting paid, never quite getting written off. They move slowly but implacably, and they are coming for you. The overheads keep creeping in, rent, payroll. Meanwhile, the cash isn't flowing in, and people still want the cash that goes out. The gap becomes terrifying. 60, 90, 120 days past due, aging like the undead. Ooh. They shamble and slowly shuffle their way forward, intent on eating your business. Is slightly better than eating your brains, I guess. The vampire cash flow gap. This monster feeds on the delay between providing services and receiving your payment. Remember that ideal number, the magic number is 53. If you are actually have a RPP or revenue per patient, and I'm sorry, that's not days in AR is the number. Though revenue per patient is also very important, but it's not the number that we're talking about right now. Your days in AR is a critical stat. Now, you know, you're in a unique business where your payment can come from one of several different people, including private and government insurances, as well as from the patient themselves. The ideal day, ideal number of days for a claim to be completely paid from the date of service should be an average of 53. Some faster, certainly possible. In the case where you have secondary, even tertiary insurances, that might be slower, but there are things you can do for that. You see patients in October, insurance processes claims in November. Meanwhile, payroll doesn't have a pending insurance payment option. So all those pesky overheads that you have don't really care much whether or not you have the cash. They still want their money. This blood-sucking gap between service and payment can drain even profitable practices into cash flow crisis territory. That's why the statement of cash flows as one of the three main, what we call Holy Trinity financial statements, along with the balance sheet and the profit and loss statement. So, banishing the monsters. Let's wrap up on this. What can we do? That these financial frights are preventable. Not with garlic and holy water, obviously, but strategic planning and proactive systems. And of course, the guidance of a helpful and handy accountant. The practices entering 2026 with confidence aren't lucky, they've prepared. So they've optimized estimated payment strategies, automated receivables follow ups, maximized tax advantage opportunities before deadlines hit, and build systems that keep the monsters forever gaining a foothold. So, this is how you basically hang a crucifix around your neck, as it were, and keep all those monsters of your practice at bay. So, with that, well, there's the end. So I hope that you're having an amazing day so far this morning and have a great rest of your day this Wednesday and a very happy and spooky and fun filled Halloween this Friday. And if you have a chance today, do something randomly kind for a stranger if you have a chance. So, with that, have an amazing day and happy Halloween. And we will see you next week, hopefully, with a little bit less scary information.